What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. Good to see you. In today's video, I want to give a massive update on the OG, the GOAT, the one that started it all, short sellers' absolute arch nemesis, Tesla. With now the second richest person on the planet at the helm, Elon Musk. As you may all be rightfully aware, Tesla stock has shot into the stratosphere these past couple weeks and is now destined for the mesosphere, yes, I looked this up, then into space, and ultimately to the moon. If you are indeed holding Tesla shares, you are probably very darn well happy at how these past few weeks have played out. In today's video, I want to discuss recent Tesla expansion deals, their share price rising, their introductory into the S&P 500, and ultimately where share prices could reach short term. Should you buy, sell, or hold? Let's get right into it. But first, Webull is doing a promotion ending in just a few weeks. Sign up, deposit $100, and receive 4 free stocks worth up to $1,700. Free. Absolute no-brainer, guys. Webull has some of the best analytics, is 0% commission trading, and is very user-friendly. Use the promo code link in my description. This offer ends soon. You don't want to miss out. Don't sleep on it. All right, so Tesla expansion. What else is new? With more and more Teslas being constructed and manufactured and thus delivered on an increasing basis, the need and necessity for superchargers, batteries, and battery components only escalates with this. Because of this, Tesla is doubling down on its production of batteries and its factorial counterparts. Tesla now has 5.4 million square feet of space on 3,200 acres, where the production of the Powerwall, Powerpack, Model 3 batteries, and electric motors is occurring. Tesla is indeed planning to and intends on distributing and delivering over 1 million vehicles in 2021 alone. This is a massive milestone for the company and in turn Tesla investors. Tera is the new Giga, a new tagline indicating terawatt scale battery production and their factory counterparts. Tesla is going on an absolute hiring frenzy, securing personnel to manufacture their new batteries, the 4680s, that were recently unveiled at Tesla's Battery Day. This hiring frenzy is positioned in Fremont, California, Austin, Texas, and Berlin, Germany. You may already know that Tesla has one of the biggest pre-existing battery plants already in Berlin, which may be strategically positioned to benefit from third-party battery sales in the coming years. This could be huge for Tesla investors. It's important to note just how massive this battery factory undertaking is and how Tesla is essentially charging, that's a pun, full steam ahead on this production output. These batteries are much more efficient, cost less, are much more dense, and can be constructed faster than ever before, which is absolutely necessary for Tesla's business model moving forward. There's a note of how vehicle manufacturing has actually surpassed the necessary battery production, and Tesla is attempting to mitigate this rapidly approaching issue with these resultant battery factories. There is a predicted incoming shortage of lithium-ion batteries, which are absolutely essential for electric vehicles. Tesla is forecasting this and mending their business operations to better position themselves for the coming landscape. With this increase in battery production, while simultaneously lowering the cost of batteries and outputting on a continually faster basis, Tesla is now poised to have a monopoly on the battery industry within the next 3 to 5 years. Remember, when investing, it's not about the current state of the company, but it's about their future potential and trends and ability to continue growing and shaping themselves to remain ahead of the pack down the line. Investors are realizing this and are thus buying more and more Tesla stock. Tesla has also increased production on their new Supercharger V3 and intends to open up a brand new factory in China to produce these new V3s. A factory completely dedicated to producing superchargers. That's it. Superchargers are an absolute necessity for Tesla as they heavily reduce mileage anxiety, which is the fear of running out of charge far away from a charging station. This is stated as being one of the main deterrents from consumers actually purchasing electric, so Tesla is doing essentially everything and anything in their power to reduce this anxiety, to thus then gain deliveries, so you can kind of think of these superchargers as a long-term investment. A Model 3 Long Ranger can recover 75 miles of charge in just 5 minutes with these bad boys, at a gain rate of 1,000 miles of charge per hour, lowering the quantity of time consumers spend charging by half. Tesla has run into issues in the past of long lines at these charging stations, so with more of them and reduced charging times, consumers and thus investors stand to greatly benefit moving forward. 1/2 of all Teslas produced next year which is estimated to be roughly 500,000, half a million, are expected to be produced in China at the Shanghai Gigafactory. So this supercharger factory within China makes a lot of sense logistically. China continues to be the largest consumer of electric vehicles in the world, and looks like this will only increase moving forward. It makes sense. Make a dedicated supercharger factory in the country where you sell the majority of your vehicles. This factory is reported to be able to produce up to 10,000 supercharging stations annually. This really is incredible. And with more charging stations comes more vehicle sales, and then, in turn, the necessity for more supercharger factories, and around we go, while Tesla shares go to the moon. This supercharger factory trend will likely continue and bleed over into the North American markets in the coming quarters. It's absolutely imperative that Tesla puts down as many charging stations and as quickly as possible, as they function as advertisements, they reduce mileage anxiety, they reduce long lines at pre-existing charging stations, and expand Tesla's already global leading charging infrastructure. Alright, so moving on to Tesla's share price. We may already be well aware that Tesla is being introduced into the S&P 500 index by December 21st. However, this may take a few days. It might not just happen on the 21st itself. Now, there is likely going to be an escalating share price leading up to this date, as investors and analysts are aware that any index tracking the S&P 500 will thus be pushed into a position of buying Tesla shares before it is officially integrated into the S&P or on the day of. Therefore, on the 21st of December, and potentially the preceding few days. Investors are also privy to the fact that this buying will occur, a unique encounter in the stock market. And because of that fact, there will be huge moving day averages leading up to this, with lots of buying and likely not a lot of selling. 40% of all assets are tied directly to the S&P 500's components, or approximately $4.6 trillion. That's trillion with a T. This is just massive sums of money. Analysts are predicting that Tesla will amount to anywhere from 1 to 1.5% of the S&P in terms of weighting. 1 to 1.5% of $4.6 trillion amounts to $46 to $69 billion, which is thus the sum of money that indices using the S&P 500 as a benchmark will thus have to purchase of Tesla stock. This is what is currently driving share prices through the roof. Shares are up over 42% in just the last month and north of 17% just the last week alone. It recently broke through the 460 resistance and appears to be completely unhinged. I would not be surprised to see intense profit taking and a somewhat dramatic correction upon selling pressure. However, I would hope for an ideal holding at the $500 level, signifying a healthy short-term growth prospect. This would mark an incredibly valuable buying entry window for investors to purchase up additional shares, as I then do think we will see an overall steady increase with bullish investors salivating at the introductory into the S&P. It's for these reasons, Tesla's continued and exponential growth and virtual domination over every aspect of EV, that I do think these share prices are strong buys. I would not be surprised to see this push well past 600 before this December 21st date, and potentially even into the 700s. This company just holds so much potential. They have great management. They always seem to be one step ahead of the rest, and they continue to prove the short sellers wrong. I would not want to bet against them in any capacity, as they continue to innovate and disrupt the status quo. Anyways, I hope you enjoyed the video. Hit that subscribe button if you haven't already. I do a ton of videos like this covering EV stocks, tech stocks, IPOs, and focus my investment strategy on disrupting innovative companies. Remember, the Webull promotion ends soon. Use the link in my description to open up an account, deposit $100, and then receive 4 free stocks. Yes, free stocks worth up to $1,700 in valuation. This really is a no-brainer. I use Webull Analytics every single day. I love how user-friendly their system is. Don't sleep on this one. Anyways, thanks so much for watching, everyone. Smash the like button for the YouTube algorithm. I'll see you all in the next video. Cheers.